conditions, and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the disclaimer, the content mentioned here and on the website. All right. So with that said, let's take a look at the PowerPoint here. Now we're going to take a look at these steps as always, but there will be a bit different, a specific mixture of the settings. As always, define the trend, opportunity, filters, trigger, and entry method. There's a good rough guidance or summary of what you could be looking for in a checklist. Today, though, because it's a specific Wednesday, we're looking for strategy settings that meet the following. We want to see the 13 and 34 EMA in the same direction. It's primarily a moving average combined with pivot point strategy. So the trend is indicated by the EMAs and the fact that they are aligned. But the opportunity is if they're bullish or bearish. But the opportunity is if they're also aligned. They can be both bearish or both bullish. Doesn't mean, though, that the 13 and 34 are aligned. What I mean with alignment is that they're both on top of each other for upside or below each other for downside. The 13 has to be above the 34 for upside. The 13 has to be below the 34 for downside. The faster one basically needs to be up front, right? So that we know that the most recent price action is pulling the faster one away from the longer term moving average. Filters could be levels like not enough space till major support and resistances, like for instance daily tops and bottoms, pivot points, the highs and lows, etc. Also, news and divergence could be, of course, in play for a filter. Trigger could be the price clearing that support and resistance and when there's enough sufficient reward to risk space. And currency correlations are things that you can pick up. Basically, price breaking through or bouncing off a level, breaking through a support or resistance or price bouncing off a support or resistance are the things that we're primarily looking for. So if there are any questions, by all means, let me know. First of all, I see that you cannot hear me, so let me adjust that. 1 second.
Is that, let's see, is that better? Good. Sorry for that. So sound seems to be good now already. So for those that are maybe new in this webinar, please let me know, because this is, I think, the 4th time we have had a Wednesday session. So if it's something new for you, let me know. If this is the first time, for instance, that would be good for me to know. I will be a bit more detailed in explaining it. And if you have any questions, by all means, let me know, because it's difficult for me to know exactly what might be unclear or would require a bit more attention. So getting feedback on that, if required or if need be, is very useful, because I might be explaining something very poorly, but I don't know what it is. So by all means, let me know. So the trigger would be the break or the bounce. The entry could be actually right then and there, but we can also wait for a retest, a pullback after that break, for instance. This is the looser trade management rule when you trail stop loss at bottom or top, a fractal basically by 6 pips. But we also have a method to tightly trail stop it, as we saw last week. And that's a bit more complicated, so I'll explain it rather in a live example. Admiral Markets in social media, take a look at that. And before we start, here's the calendar. We have MPC meeting minutes, so the pound is a bit off topic until we get that later today. We have FOMC meeting minutes at 11 hours, which means we can still trade in the New York session, but if you get towards the end of the the end of the morning in New York and the afternoon in London, then I would not personally trade anymore. Lunchtime happens around 2 hours or 3 hours before the statement. So I wouldn't expect much movement after that, during that, and towards the news event. So practically speaking, I would say around 11:30 a.m., noonish would be the cutoff point. Well, actually, probably 11:30. After 11:30, I wouldn't take any trades anymore, roughly speaking. New York time, right? Eastern time. So that would be 4:30 London time. Alrighty, let's see, this is the euro-dollar 15-minute chart. We are looking at the strategy, and we can see that the moving averages are quite flat. That's not so it's not so unusual or untypical for an Asian session, of course. So that is quite normal with this euro-dollar. That's why breakout trades early in the morning is always a bit difficult, because of the quietness that we've seen at the very beginning of the day. And that's why I like to see a bit of movement first before trading it. Yesterday we had hardly any movement. In fact, you can see just one quick drop, and then after that was consolidation. And before that was consolidation, or actually some spikes up and down. If it's this flat, that's why I don't like taking breaks like that, because you just have quite a lot of spikes up and down before you have a potential for price to move longer in one direction, like a trending breakout mode. Usually speaking, that trending breakout mode doesn't happen in the first hour. It's just a general rule or two, but usually speaking, you would see more spikes up and down, and then you see one particular direction finding a bit more foothold, a bit more follow through. In this case, I would expect the same prices about dead in the middle of an H3 and L3, with the pivot, the daily pivot, just a bit above it. So it seems to be quite in a neutral place. I would expect that actually both sides a breakout is possible. There is some headache with the upside, in the sense that there is a weekly pivot and a daily pivot close by. So in that regard, the downside, I would think there's a bit more space, a bit more freedom here, in the sense that there's less key levels in sight. So the downside break would be probably a bit more preferable. The hourly moving averages are also bearish, but they are quite flat at the moment. However, we can see a bit of a advantage for the bears in that regard. So if you take a look at a bit wider picture of the hourly, we can see maybe that S2 today could be the target, 135, for instance. So some smaller downside trades could happen. So what are we looking for specifically? I want to see basically the moving averages are aligned on both time frames, the 15 and hourly. Filters, well, we have that news event on the pound, but it wouldn't be that key for the euro dollar. The step 4, as we know, is the trigger, right? The trigger. So we need basically price to push through some support level here. Now I wouldn't, as I said, I wouldn't be taking this break here personally. It could work fine. What I'd rather do is wait for the break and then the pullback and bounce. So if price does make this motion and the moving averages start to curl down like this, and price pulls it to the downside and then starts to hook back to those moving averages and then bounces off those moving averages, right about here could be probably one of the better entries, because you're not assuming the bounce, but you get the confirmation of the break, first of all, to the downside. You get the confirmation of a pullback and then a bit of a bounce. So if price is, for instance, showing some candlestick pattern on the 50-minute chart at those moving averages right here, that would be probably the most interesting. Down to the S2. So I don't know if you can visually see what I'm trying to draw. My drawing skills are not the best maybe, but that's what I'm looking for. The upside would seem a bit more limited. There's another option though that what could easily take place is if price does move up and hits the weekly pivot point, and we see a nice rejection wick there, it could be a good shorting area for downside as well because we have these tops in play. So a short around that level, around the weekly pivot point in the daily R1 and these tops, if we get a good price action signal on the 15 or 1 hour chart, could have its profitability hidden in it. It could be worth it, let me say it this way. The L3 is Camarilla indeed. If you would like the Camarilla, just send me an email and I'll get it to you, okay? Let's see if something else is going on. Pound dollar is more bullishly set up. Just from a visual perspective, we can see momentum here, and this is a sideways triangle. That does not guarantee price will break to the upside successfully. No, especially because price is right at the 170 psychological number. Plus, 170.40 is a 6-year high or so, dating back to a long time ago, 2008 or something like that, or 2009. So that is a big top. So price is relatively close to major resistances. So in those cases, when price is that close to resistance, this could be just a pause for actually a bigger correction instead of a continuation. Normally speaking, I would say continuation. It spells continuation in it because of the big momentum to the upside, followed by a sideways, calm sideways move. There is a statistical probability that you will have a follow-through, a successful follow-through on that. In this case, though, because resistance of that magnitude is close by, that changes the equation. So, bit careful with this pound dollar, as I said yesterday. Let's take a look at the 15 now to see how it is set up. Yeah, here too we have that same, flatness on the moving averages on the 15. So 15 is vulnerable again to these spikes up and down, I would say, especially because we have the pound news event coming soon. So I think there's really nothing to discuss at the moment. All I can say is that if price maybe were to get to one of these extremes, like the S2 and the weekly pivot point and the ATR projected low and the L5, could be a good bouncing spot for upside. Right? If price makes a dash through the news event and you see some signs that could be bouncing. Be careful with those news events, obviously. But the upside, the daily R3 is at 170.40, which is that major top. So there's not a lot of space if price does break to the upside, but I'm a bit worried about the fact that it's so close to resistance. But if there's a good reason, if there's a good break, pullback, the same like the euro dollar, and bounce, it could still be worth it. Odd USD. Oh, Adrian is saying that it's interesting. 86% of the Admiral Markets clients' positions are short on GU. Yeah, it is a big resistance indeed. So I can imagine the interest in that particular trade idea. There's a lot of shooting stars as well. So yeah, there's a lot of things, resistances here at that 170 level that make that probably appealing. Plus, of course, it's a tight risk trade. It's a tight risk play because if you put your stop loss just above here, you have a pretty tight stop loss for who knows what kind of potential. So yeah, I can see that. The thing I'm more worried about is the momentum that it has exhibited to the upside. So I am lingering on two thoughts. This is really pretty strong. My own wave analysis counts are showing that this could be a wave 4 for a wave 5. But it doesn't have to be, though. It could still be an ABC. That C wave, though, if it is a C wave, really had a lot of momentum in it. which is sometimes happens, but it's more typical for wave 3. So that's why I'm a bit cautious on both sides at the moment. If you would consider this a wave 3, you can put a fib from the very bottom to the very top. And usually speaking, the wave 4 does not go below the 38.2 fib. So if you look at where price bounced off recently, it was the 23.6 fib. The 38.2 would be the next logical bouncing spot for wave 4. Coincidentally, or maybe not, it happens more often, the 38.2 fib is right at the daily S2, right at the weekly pivot point, and the L5. That would be another confluence, another reason that if price gets down to that 169 level, which is around number 2, which is not that important, but as an extra, as a sixth or fifth extra, it could be interesting for longs here from this spot. Now it might bounce up and go nowhere, but okay, fine, we just move it to break even and there's no risk on that trade anymore. If it breaks below that, then things are starting to look more bearish in my opinion, and especially if price gets below wave 1 top. We know that the wave 1 top is the invalidation level, so that would be the important level for bears and bulls. The 50 is less likely, but could still be a bouncing spot. If lower, then it's looking more bearish. So I would still, looking at the momentum, still consider it more bullish than bearish, but I'd rather buy it from a better place than from current price, or let it wait for a break, pull back and go. Bearishness, yeah, I would probably, because it's a reversal trade, and today's strategy is really not geared towards reversal strategies that much. It wouldn't really fit. So any shorts in here is really reversal oriented. It doesn't really match with today's focus. If let's say that this would be a reversal webinar for the moment, then let's see. We would probably a daily close below this level would be already an important indication, or at least, let's see. Yes, probably would rather short it from higher. I would probably rather short it from the DR3 and the 170.40 exactly. That could be an idea, or wait for price indeed to break down and hook up and then short it from there. Now it seems like in the middle of nowhere. I wouldn't be too fond of it at the moment, unless maybe unless it makes a double top, for instance. That could be different. If it makes a double top or goes to the R3, those could be shorting areas. That would be my opinion. But Adrian is saying on the long run, he's expecting pound will go up since they announced they will rise the interest rate sooner than expected. So also from a fundamental point, maybe indeed, that could be in play. So that's a good observation. The audio USD has a downside momentum. This is what we're looking for in this particular moving average strategy. The 50-minute chart, however, is flat and is actually getting a bit of a bullish bias at the moment because they're turning blue and green. Price action is pushing through it to the upside. So it seems like we're getting some kind of retracement here on the 50 against the hourly trend. So those two are not matching up at the moment. What could be interesting, obviously, if price were to hook back and bounce off the daily or weekly pivot. The breakout to the downside too is a bit shaky because of the monthly pivot here, close by. So that looks a bit relatively close. Not as close maybe on this chart, but it's only 20 pips difference here. No, the Aussie doesn't really look that great. Stuck right in between these pivot points. The only thing that looks nice is the hourly moving averages. Otherwise, that's about it. If we look at the daily chart, though, obviously a very bearish day. So in that regard, a hook back from where downside probably seems the most likely. How far can it hook back, though? It could hook back roughly either to the daily for a shallow one or a weekly for a more deeper retracement on the Aussie. Obviously, if it gets into here, we're getting close to the R1, the daily R1, the ATR projected high. So this is a really better level because it's closer to resistance. This one has a bit more space above it, so the stop loss is bigger. So hopefully it will get a bit higher to the upside, and then that would be a good pivot point shorting areas. The momentum, however, is down, but price is moving up, so they don't match. Kiwi, I think, could be quite simple. Sorry, there are a couple of moving averages extra here. Let me take those off. I don't want to confuse. If we look at the main two moving averages, they are bullish, but they're not aligned as yet. They might become aligned this hour or next hour. We get the crossover, but they aren't as yet. So we don't have the conditions to look for breakouts and trending trades according to the strategy on the New Zealand dollar. Let's take a look at the dollar CAD. Dollar CAD has that angle to the upside. There is weekly a monthly pivot point just above it. I don't want to be a party breaker here, but I would not be too enthusiastic with resistance so close by. Dollar yen, let's take a look at that. We did get the break to the upside. We got a break finally after this smaller triangle has took place. Yeah, these things, this pair seems to be aligned, so we can analyze it a bit better. Our first step of this first strategy that we're looking at is whether moving averages are bearish or bullish. Well, this is bullish, obviously. They're both green. Are they aligned? Yes. The 13 is above the 34 EMA, so that's good to go. No filters that I can see of. The trigger basically the price clearing the support and resistance. So we had here already the break of this trend line and the break of the H3. So with the bullish mode, I would not be too worried about the R1. The main target for the moment is R2 plus the ATR high. Weekly R1 here, H5. Roughly this zone will be the first target that I think it could have a heavy impact on this pair. So this is looking actually like a break pullback and continue potential. So I like this dollar yen. I think it's worth putting on the watch list for the moment. It's the only one that I think really has some potential soon. Now we know that the pound is interesting potential in the year or two, but it just will take some time before they're set up. Plus we have the news event, so that might take a while. But the dollar yen looks actually closer to getting set up, a setup. What I would be looking for now specifically is because we already had the break here, but we didn't get a big break, but still we did get a break. This trend line too. Once again, moving averages nicely aligned, big gap on momentum or decent momentum here at least. But I wouldn't trade it just like that right here, right now. I would want to see some confirmation because you never know. We do have divergence between these tops. A single divergence though, not double. Double, I would be more cautious of it. With a single, I think that that would still be okay. But we do need to be cautious of the fact that this move up could be, could turn into a bigger retracement. Maybe, for instance, price could go back to the weekly and daily pivot. If it were to do that, it could be worth taking a bounce off that, by the way. But I wouldn't take it right here now. What I would rather be waiting for is something like this, for price to move back to the moving averages, but then break above it again. So something like here. That could be the entry. We don't have to wait necessarily for this fractal to break, in my opinion, because we already broke the LH3 and these tops. I wouldn't want to necessarily wait for the break here, because although we still have some space, it does significantly reduce the amount of space compared to a trade that is geared towards catching a bounce or a pullback. So in this case, the break would have been good here. I don't mind that the H3 short wasn't broken as yet at that point, just because of the bullish moving averages and a pretty nice consolidation. So that looked like a break was going to happen, and it did. However, we can see that it didn't go far, so probably we have move it to break even now, and that's it. So anyone who took that break would be at break even now because the break didn't go far enough. But it doesn't mean that the next bounce wouldn't be interesting. You can see price move back to moving averages, and if the candle closes above it again, I think it's worth a long for that with that R2 as a target. So we can keep an eye on that throughout our session. Now the difference you might think is, why take a breakout? Why take a breakout potentially here and not wait for it here? And that has, for me, that's important because of the space. When you're still not too, let's say, it's of course not that black and white, but roughly speaking, if you are getting closer to the daily R2 or the daily S2, then you're eating up more and more space. So if you take a breakout, there's not much space left. If you wait for the break of this fractal, there's less and less R2R left because your target is smaller and your risk is bigger. If you just take a breakout that you still have pretty bigger space, then the balance there is still okay. So now I don't have anything against trading the break of this H3 because it's different. The difference between taking the breakout here and here is the fact that price has already respected the H3. So if it then pushes again through these fractals, it's basically breaking the H3 too. If you take this breakout, then you do have the fact that the H3 is close by. Do you see what I mean? Do you see the difference there? So the first one, where I have a 1 here, is different than where I have a 2 here, because the 1, price is approaching it for the first time. It's different. It's a decent chance that level will be respected. The second case is different because price has already respected multiple times the H3, or once is enough, but in this case 3 times. So if we then break it, even though the break is close to the H3, it's different because price has already respected the H3. The H3 is a good level. It's not like it's not as strong as maybe a major daily top, for instance. So because we've already respected it, it's when price breaks through this fractal, it's basically breaking, in my opinion, through the H3 as well. So that's how I look at it anyhow. I don't know if that makes sense, but so that's why this breakout was good. If you have doubts about a breakout, you can always wait for the candle close. That is one way of doing it. We had the moving averages aligned here, the hourly M15, so we could have taken the break of this fractal, but if you want more confirmation, wait for how the 15-minute candle closes in relationship to that fractal. So if we look at that, that was a good break. Why? If you look at this candle, which is the breakout candle, it had a close near the high. That means bull stayed in control, so anyone could have taken the entry at the close of that candle or maybe a small retracement of that candle for upside. Now we see that price never went anywhere, so one thing you want to keep an eye on is a time exit. I try to give the trade anywhere between 3 and 6 candles. So depending on where you took it, this one or this one, you have 1, 2, 3, or 5 candles, well, you can see that 6 doesn't go anywhere. You still get a rebound, but it's taking too long basically. So exiting at break even here makes sense because it just didn't get the speed and momentum fast enough. And now we're getting a second pullback, which is great. And yeah, now we're waiting for the bounce basically here again. But this was a good breakout candle. So that's another way of measuring if the breakout is good. So let's take a look at, I will only comment now on pairs that actually have something to discuss, otherwise I'm boring you with not so relevant details maybe. Well, I like this euro yen. Because of the bullish moving averages. What I don't like is the weekly pivot point at close. So obviously that makes it a bit difficult. When I talk about the dollar yen, here's an example actually. You see, this is a good breakout right here on the euro yen, but I wouldn't want to take this breakout. What could be good is the bounce off the moving averages. So the breakout, the two blue circles are good, the breakout and the bounce. But this second breakout, where I have the green line, is not so interesting to me because we got a weekly pivot close by. So this and this are different stories because we still have space. This, not so good because it's too close. So hope that makes sense. That's how I look at it. So if you, I mean, that's up to you what kind of filters you use, but if you use weekly pivot points, then obviously you can see price is close by. Richard, which currency pair are you talking about actually? Is that the dollar yen or this euro yen? Adrian is saying that it looks like a small USD weakness overall at the moment. Yeah, AUD is going up as well. Euro is making that upside too and hitting the daily pivot point at the moment. Pound is moving up as well. Alrighty, pound yen. Has good moving averages both on the hourly and 15. Have to admit that is looking bullish, very nicely bullish. We had the breakout trade above the H3 here, and price is continuing with its break. So this was a better break actually than the dollar yen and euro yen, probably because the pound is pushing it more, right? So the pound yen break is doing better. And yeah, we need to pull back now. The pound, unfortunately, the pound yen unfortunately has the pound, of course, and they have the MPC multi-minute, so I wouldn't trade it. In theory, though, if we didn't have the news event, or after the news event, a pullback and a bounce would make sense, I think, on this pound yen, right? Because it is in a bullish mode. AUD yen is mixed. Let's see, this is the pound AUD. Yeah, we need a direction here. If you look at the moving averages, we need some direction guidance. The hourly is definitely up, that's for sure, but there is also a bit of divergence between the tops. But it doesn't mean we, I would say single divergence is always definitely is not as clear as double divergence. Double divergence is absolutely a no-no would be filtering it out. It's too risky. I mean, not that we couldn't get triple, but the chances are definitely diminishing quickly. A single is a warning sign, but it wouldn't be right away exclusive for, or excluding, sorry, a potential setup immediately. It could be a supporting factor, though. So looking at that, I think there is space to the upside, but we haven't challenged H3. Prices refrain from hitting it. So it's a bit different than the Euro-Yen, where price hit the H3, stopped there, and consolidated. I would consider a break. Okay, price did not hit the H3, so if it now breaks, we are bumping still into an unchallenged, on new territory. Therefore, I would not be taking this break. I know it's maybe a subtle difference. The break could work very well, I'm not saying, but it wouldn't be, I wouldn't take it. I would rather wait for the break and preferably take it to pull back, in fact. Or let it break, pull back, and even take the next break. Either of the two. Or if price does move back to the daily pivot and then bounces, that could be a price action setup right here at the daily pivot. So Bharat is actually asking about that. Basically, there are roughly two strategies that we're looking at the same time. It's a moving average strategy where we're looking for trending modes to continue with those moving averages. So the hourly and 15-minute moving averages need to be aligned, and you're looking for trending continuations aligned with those moving averages, but at spots where price is not too close to pivot points, so that we have enough trending and breakout potential. So in that case, the pivots are actually a filter. The moving averages are the trend, the pivots are the filter, and the trend can continue and is worth trading until price gets too close to those levels. The other idea, the other strategy is basically if price goes back or towards the pivot points and bounces off them. So one is a breakout, where we use moving averages to identify the direction and pivots as to filter out if price is too close to them. The other idea is to use pivots as a bouncing spot. Let's say we have this trend in play to the upside, right? So if pivots would be above it, we would be cautious. They aren't, they're below us. So in this case, we can actually use them as bouncing spots. If price goes back to the daily and there's a price action signal, a bounce, off of the pivot point, right, then it could be a bouncing spot. So in that case, the pivot is actually not a filter, but the pivot points are, let's say, triggers, potential triggers, where if price goes back to them, the price could use them as a bouncing spot. So pivots could be either filters in the moving average, breakout strategy, trending strategy, or they can be like bouncing spots in a kind of price candlestick pivot point strategy. Good question. Thanks for that, because I'd like to know if anyone would like a clarification, so that that helps me have an idea what people in general would like to clarify more. Yeah, maybe I'll change that PowerPoint, because I only actually focus on the moving average strategy. I'll make it a bit more clear maybe, because I don't mention anything about bounce trades in that PowerPoint. So I'll add that. That's a good idea, in fact. No, I don't know it. I would love to have it if it's available. Obviously, if it gives some signal, that would be great. I'm not aware of anything like that. Not that I've looked intensively for it either, but well, I have this this candlestick indicator that shows what pattern candlesticks are there. That helps. Not that I couldn't probably spot many of them myself, but it takes the stress away of trying to identify all of them. It just makes it a bit easier. It does make the chart a bit crowded, but I think it does make things faster. But that's as far as I get to an EA. But if anyone knows that, it would be great to let us know. Let's see. Yeah, we got the pivots below us, the daily and weekly. The monthly is all the way up here. Wow. Big gap there. The 15 is not aligned with the hourly moving averages. The 15 is bearish, the hourly is bullish. But if this does get bullish, then obviously it would become aligned with the hourly. So as soon as the 15 gets into a bullish mode, I do think that the euro bullish potential is there. Price has stopped roughly twice at the H3. So I think this could be worth a potential breakout. We might want to, oh, Bob is saying hourly divergence. Let's take a look. I wouldn't consider an hourly divergence as yet because of the fact that if we look at this high and compare it to this high, because this is where the price went to the zero line last time, then we are making a higher high, obviously with the price, but also with the oscillator. So it looks confirming. So we don't have that as yet. We don't always need a divergence for price to fail with continuation, but it does help, of course, and we don't have it at the moment. This is getting back to the zero line, which means that this could be a wave 4, most likely. This could be a wave 1, 2, 3, 4, 5 scenario. Why? Because we have a 3 that is stronger than 1. It doesn't have to be, though. It could still be an ABC. And this is part of the next correction down. However, looking at the AO, there's a decent chance that upside could happen. As long as price stays above this top. In any case, for getting out of the way for the moment, we do see that this is going back to the zero line and the price is going sideways like that. That in itself already indicates that we are probably, when this gets to the zero line, there's a decent chance of making another wave up, another move up. So I wouldn't consider hourly. Maybe 15-minute world has divergence a bit, but let's take a look. Not between these tops even. Yeah, so that looks pretty bullish, in fact. Will it move up? I don't know. But if price does move up and the move averages turn bullish, it could be worth a breakout. Now, you don't have to take the breakout immediately. One way of doing it is waiting for a 15-minute candle to break this fractal and look at how it's breaking. Sorry. If it breaks with a good close near the high, that is probably a decent sustainable breakout. If it breaks with a wick, then it's probably a first break that went wrong or went false. Wait for the next pullback. Wait for the first candle that engulfs the bearish candles here, and that could be the buy signal right there. If you get a false breakout. If you get a good breakout with a good close near the high, it could be worth taking immediately. What if the price doesn't move up? The other scenario in that case would actually be a bouncing spot at the daily pivot. So that we could use candlestick patterns on the 15 or hourly at this D point, D pivot and the L3 for a bounce to the upside. So one strategy would be looking for a breakout, one would be looking for a bounce. Or we could even look for both if we get that. So the euro odd is something I would find interesting, more interesting than the pound odd at the moment. But the pound odd, yeah, it's not bad. It's just we have the news event anyhow, so the euro odd is looking better. This could be already a bouncing spot off of that moving average, in fact, on the dollar yen here. So that could be it. Now I was hoping a bit for actually the moving averages for price to dip a bit below it and then above it again so that the color changes like here, in fact. But sometimes the candlestick pattern itself could be enough. I'd rather wait a bit considering the news event though. So I'm just trying to say that in some cases I would consider this already enough to take it. At this point, I wouldn't. Just because of the news event, it's early in the day, and I would rather wait a bit more personally for that news event and see if this could maybe dip below and back above. Let's see, what else we were looking at? That's it, okay. So, let's continue with the pound CAD. Same story as the pound dollar, I think. Euro CAD, it's flat, so it doesn't look that interesting. Alrighty. So that's it. I think the dollar yen, pound yen, pound odd, euro odd, and also to a certain degree the pound dollar, euro dollar are the most interesting at the moment. Obviously, we have to wait for the pound news for at least pound, at the very minimum, the pound pairs. The best one of those, I would say, is looking the pound yen to me, at the moment at least, but I have to wait for the news event, how that impacts it, and I would say the euro odd. But time will tell if that is true. But those two out of these 7 that we identified as most interesting. I got a question. What is the L3? Basically, it's part of the Camarilla pivot point indicator. And no problem. I gladly, by the way, see all questions so that I know that everyone is aware of what we're looking at. L3 is basically part of the Camarilla pivot point indicator, and it means range level still. So anything between H3 and L3 is kind of like the neutral part of the day, where price is still within range limits. If it's above or below the L3 and H3, it's getting more into a trending zone, especially if it goes below L4 or above H4. Then we're in breakout territory. The L5 and H5 are basically targets, rough targets of that breakout. So L3 is the bouncing spot at the bottom of the range, the expected range for that day. Obviously, price does break out of those levels at one point, most of the time. But this is indication of where we would expect that range to be. So last week we actually had a live Euro CAD trade that we took. I discussed it yesterday's room, but for those that only are looking at the strategy webinar maybe, I do think that it's appropriate to take a quick look what happened. There was single or double divergence on the hourly, so I wanted to have a tight trading stop loss on that EuroCAD, and I'm trying to figure out where we took the trade first of all. That was last week, so that was the 11th of June somewhere. Here. Sorry about that. Here it was, I think. Yeah. No, that's the 12th of June. Grr. Yeah, it was this one actually. That's strange. So it was not the 11th, it was the 12th. I don't know. Don't know why. Maybe I don't know exactly. But anyhow, it we had this breakout candle which was close to the low. We took a small retracement actually of that candle. I shorted it there with the stop loss above here, and was saying watch out for the 50-minute. I wanted to trail stop it tightly. Main of the reason was because we had some divergence. Didn't expect a lot of downside. I was waiting for a crossover and a close above the 2-moving average. However, if it is still something like this, which is bearish, you might want to consider waiting for the next candle and moving the stop loss above there. I was lucky I didn't see this happen, and when I looked again, price was already moving down, so I waited, and we did get some downside still. Now, not a lot though. So if you wait for a bullish close above the 2 EMA and a crossover, basically your exit would have been this candle right in here, where you have basically the 2 crossing the 4 and a bullish close above the 2. That's the exit. With the entry there, it was about 15 pips. So not a lot, but what can you do? The market didn't go far enough, and then we got the move up. Now you can see that the place where the exit happened is in fact a pretty good exit, considering the fact that after that we moved up quite a lot. It's not always that neat, but never ever one particular exit would be. But did a good job here, and you know, obviously if you would have exited here it would have been better, but you never know without predicting where the price could turn, because you never know, it could fly and continue a lot lower. This was a good moment as a reaction to that let's say bounce at this spot. Right? It was probably one of the better moments we could exit after you got the confirmation that it doesn't continue, but not too soon either. That was one that we did live in this room. At the moment, I don't see anything that we could really take live at this point. Maybe the Euro, but the Euro is only isn't moving down, not up, so that really doesn't match with what I would be looking for. There was also another strategy we took a look at last week. I'm not sure if I have a template for that. Yeah, I do. Let me use a different profile though, 1 second. The indicator that with the L3s and H3s you can get from me. All right. Just send an email to myself with the topic. Somehow the not getting the new template here. 1 second. think my chart are frozen. Do you still hear me though? I switched these profiles. Okay, cool. But it seems to be giving a bit of a slowdown here. Alrighty. So I closed it. Now just give me a second as I reopen it here. So the World Cup is in full swing. Just a bit of off-topic topic as I restart the charts here. Does anyone have a favorite team? I'm rooting for Holland because I'm Dutch, so I guess that's an easy one. And Holland started off well, as you might know. Unexpectedly, no one really had any much hope for Holland beforehand. I think they were rated 10th, which was, I mean, at that point, I mean, or now we could say quite low, maybe, but it is also quite a new team if you compare it to 4 years ago, so I can understand that. The Forex Ball Championship, I don't know much about it in the sense that I know that's connected to the World Cup, but how the rules, exact rules, are working and stuff like that, unfortunately, not. But some traders, if there's, I'm assuming it's with a demo account, and yeah, you can, if you really put the pedal to the metal, which means you put really like a lot of effort and you're trading a lot of trades consistently. I guess you can create a lot of opportunity. 220% obviously is a lot in 1 week, but yeah, I've seen a lot of results that resemble that on demo. I know that traders are out there that really can perform very high on demos. Sometimes even real accounts, but obviously the demo is easier. But yeah, 220% is really a lot in 1 week. Let's see. Vikantas is saying Holland and Germany, and Bharat is saying for Perez he's the man. So let me use this template now. What I wanted to show you, that was the strategy we looked at last week. So I'm not sure if all of you were there last week, but let me show you the template first of all. That was a different strategy. Strategy kind of like number 3 in fact, because at this point we looked at more or less 2 strategies in one shot. Similar, but different than, again, 2 still distinctively. So we can say this is a third one. Before I dive into this strategy, though, Bharat is asking about a webinar about Camarilla, and the best is to go to admiralmarkets.com, click on education, go to webinars, then go to video archive, and let me take a look when we had the last one. Oh, it was actually last week, the 11th of June, Camarilla versus indicators. That was a very recent one. That would probably be the best one then. So this strategy is looking for the Tenkin. There's always, the trend is basically wherever the Tenkin is in relationship to the Kiyun. So if the Tenkin is above the Kiyun, then it's up. If the Tenkin is below the Kiyun, it's a downtrend. So on this Eurodollar, it's very simple. It's actually intended more for the 4-hour chart, but we could probably use it on the hourly too, but the Tenkan is above the Kiyun, which means we are in an uptrend. The only thing we do want to see is the Tenkan still sloped also as the upside angle. So whatever the trend is, the Tenkan has to be in that same direction. If it's an uptrend, we want to see Tenkan sloped to the upside. If it's a downside, we want to see the Tenkan sloped to the downside. This was a strategy that is relatively new. I just created it very recently. It was more actually by coincidence. Well, not coincidence, but for not necessarily for myself, but for someone else. But I created pretty fast. But the stats are very interesting. It has a t-statistic of no, I cannot find where the statistics are. It has a t-statistic of 2 points. Where is it? Maybe calculated on a different sheet. Okay. Well, anyhow, it's about 50-50 win rate, but the average win is 3.2 and the average loss is 0.6. So it's about 5.5 profit factors. So that's a lot, obviously. The t-statistic is a measurement on how reliable the performance is over the long run. If it's more than 2, it's pretty reliable. So it had 2.7, I think, or something. So it was pretty high, and it has a big profit factor. Obviously, this particular strategy is capitalizing on strong trends. If it doesn't have a strong trend, it's going to perform weaker. So that's something to note. But the strategy would indicate that it's not ready. The Tenkan is flat at the moment here. Let's continue with maybe an example that does pose an opportunity, first of all. 1 second. You see the Tenkan is above the Kiyun, but the Tenkan is angled flat at the moment. It doesn't have that upside angle. You see? Not yet, at least. So we'll have to wait and see how this 4-hour candle behaves. If the 4-hour candle really pushes through these parabolics strongly and the Tenkan starts to point up, well, then it's a different story. But at the moment, according to the strategy rules, it would not be a trade that is worth taking to the upside. The breakout would not be yet valid. The odd USD is in a downtrend, but we need the parabolics to be below it, so we have a breakout potential. So I'm not sure if this strategy is clear, but all what we're looking for is the trend, to identify the trend. That can be done by Tenkan below the Kian or above it. Then we want the Tenkan to be in the same direction. And the next thing, step 3, is price then breaking through the parabolics. So if you have an uptrend like this pound dollar, then you want, and you have the Tenkan in the up mode, then you want to see price break through these parabolics and close above it, or actually close strongly, the candle itself. But we don't have the Tenkan here aligned. But if we would have the Tenkan upward, then we would have an uptrend, an up Tenkan, and price breaking through the parabolic. If we close then above the half mark of the candle, it would be a breakout trade right there. So the rules are pretty simple. I think you probably might need a few more examples to clarify that, because it's still maybe new for you, but I think you'll quickly see that it isn't too complicated. You just probably just need to see a few examples, and you'll get the hang of it pretty quickly, I think. It's interesting that a simple strategy like that could be that profitable, as I tested on the Euro odd. Last week I didn't have those results yet, so we were just looking at it from an interest point of view. I did some testing in the meantime. It was really interesting to see that. Let me find an example that could be ready for a breakout. Let's take a look at the Euro odd. hourly, 4-hour doesn't have it. The hourly doesn't have it either at the moment. It's fighting against the breakout, but not there quite yet. Maybe the audio is the. Let's take a look. Well, according to this strategy, we wouldn't be looking for longs on the hourly because the Tenkin, the magenta one, is below the brown one. So this strategy is seeing this as a downtrend, therefore. But yeah, I mean, that's this strategy. Of course, whatever, maybe the other strategy, right, would be maybe looking at something different. But this strategy would see this as a downtrend. Maybe our moving average strategy sees that differently. Let's take a look. Four hours also down, but maybe our original strategy that we looked at earlier today is looking differently. Let me take a look. That also looks bearish, in fact. Right, so the moving averages are not bullishly aligned as yet. Doesn't mean it cannot bounce, though, of course. Yeah, pound dollar is bullishly aligned, but we don't have the Tenkin, as far as I can see, is not clear if it's going to be closing with an angle. If it does close with an angle, then this is a breakout trade, according to this strategy. This is the closest we are to having a setup. I mean, looking at the pairs we have looked at so far. Let me take a look at others. I only tested on the 4 hours, so I'm not sure about the other time frames. Yeah, the hourly is looking like a breakout indeed. I agree. We have the Tenkin at a above the key. We have Tenkin at an angle, and price pushing through parabolic. The last requirement is that it doesn't close with a big wick like this. If it closes like this, I would not take the breakout according to the strategy. The number of opportunities on average was 3 a month, by the way, so on one pair. So it doesn't happen too often. So it really would require trading at least 10 pairs probably, if you really want to trade it a bit intensively at least. Which then, if you have 10 pairs, would mean you have 30 trades a month, which means roughly 1.5 a day. Even that's on the low side. Probably 20 pairs. That would be then 3 pairs. 3 chances a month, but I would have to test it still on more pairs than only that euro odd, obviously. Right? The testing is still very, very limited, by the way. So, which one could be breaking out soon? I didn't check it beforehand, unfortunately. Didn't have enough time. Maybe we can check which one could be in a big trending mode. Well, the Euro New Zealand maybe. Let's take a look. Yeah, this one doesn't qualify actually. This one did here, but that didn't go too far. No, this one didn't either. The Tenkin is flat, sorry. This one, the Tenkin is up, so no, this one doesn't qualify. Could be difficult to find one that, is valid right here, right now. The pound yen actually qualified. Funny. So we have a recent example here. The pound yen had an uptrend when breaking it to the upside because we had Tenkin above the Q. Clearly, the Tenkin was at an angle when it broke, and when we broke these parabolics, right, the Tenkin was up, Tenkan was above the Kiyun, and price closed probably just about above half. If it didn't, then it would be doubtful, but let's take a look. It was actually just below half, so it's a close one. I guess it's a bit of a discretionary call there. If that's filtered out or taken, if taken, the entry would be at 173.29 with the stop loss below this bottom here. It is an example though where everything is lined up for the upside and price breaks through a parabolic. So then you have the example here of this breakout strategy using Tenkan. Is there a question maybe regarding this strategy? So basically you need, there's always a trend, either up or down, but the trend is confirmed when the Tenkan, the magenta one, is also pointed in that same direction. Then the last step would be to wait for a break above, in the same direction as the trend through the parabolics, and wait for a candle close that signals at least some strength by closing above the halfway mark. It's that simple, basically. It's not too difficult. I tested on a 4-hour on one pair, so a lot needs to be done, but it does look interesting at the very least. But more confirmation is needed. But the first small test was very positive because it was only a 50% win rate, but with those wins, the average win was about 5.5 times as big as the average loss, which is a lot. So that's the idea. So otherwise, I don't see any questions, so we could wrap it up. Let me know, though, if you do have any questions. Once again, we still have some webinars this week tonight. Neda will be back with the truth behind commonly used indicators study. Tomorrow we'll have FIB trading in our usual session, and then tomorrow evening, how to trade with Android and iOS. So 3 webinars left tonight, tomorrow morning, and tomorrow night. If you have any questions regarding this webinar or the strategies that are mentioned here, by all means, let me know tomorrow morning or next week. If something pops up in your mind, then I'll gladly answer them later. Otherwise, if nothing is, questions or comments or screenshots for that matter, then I guess we'll wrap it up. And wish you all a good day and see you soon. Cheers. Sorry, there's a question if I know this Friday's Superman Edition seminar. Yeah, June 29th. I know. I'm not sure. I know that June 29th is a special webinar. I'm not sure when that is. June 29th. Next week, Sunday. This Friday. No, I don't know that. I don't know what the Superman Edition. I don't know what it is, in fact. So can't help there. Ah, okay. Yeah, I can ask him. I'm not sure what it is. So I'll let you know tomorrow, okay? I can ask him, and let's see what he says. And hopefully I'll get an answer today. And if you could only remind me tomorrow about that, then I'll let you know, okay? Cheers.